then and the carbon side, or just the carbon black that I've been talking about, there are also the other line items in it, like the silica and so on. So it is multi-revenue. Going back to why I chose this industry in the first place, the predictability. I can't say predictability anymore. The predictability is really important. As the economy grows, the problem will just keep growing. At worst, out of all of those revenue drivers that I mentioned, maybe one of them might diminish, but that's not really a problem, and that's the gate fee one. If more and more people start trying to get into the industry, I'd very happily let that go, because the revenues or the real profitability does not come from the gate fee side of things. I've spoken about defensibility. We've created really nice barriers to entry. On the environmental compliance side, really hard to get stockpiles. Having access to those, very hard to get. There's people now approaching us saying, how do we get tires? So we've been with the Waste Bureau for 11 years. The ability, and the ability of them to move away from us to give tires to someone else is almost impossible. The head start we've got to the mines is really good. The school fees we've learned is massive. I feel for people who are starting this thing from scratch. It's really, really difficult. So the R&D, the capital intensity, people think they can spend a certain amount, and guaranteed it costs a lot more than that to get to the level where you want to be. And then obviously we've got the validation. We're tying ourselves up with some of the OEMs already, so that becomes a little harder for other people to step in. And then scalability. It's funny to think that our pilot plant has produced 80,000 tons. So the new plants that we're going to start building and raising money for from next year will be taking all of the lessons we've learned. It'll look very different to what we have now, because what we've got right now, if you can imagine, using all of the school fees is a camel, right? Oh, we need to add this. Oh, let's put it here, because we had no space. So building a new site with all of the lessons we've learned, being able to store, for example, our own energy, makes a very, very different business. And then, there's the world is our oyster as far as geographic expansion goes. Once you've gone to Botswana, if you really want to go somewhere further, a place like Australia is about 20 times bigger than the South African market, with all of their open pit mines. So there is quite a lot of upside that can happen, and then carbon credits, of course, is a really positive thing. So, this is my last slide, but I just want to say that what we've managed to put together is a bit of a preview on what we think future African industries will have, and it feels like it's just a slide full of buzzwords, but all of those are pretty real. Circular, we're fully circular, we decarbonize, compliant, sustainable, profitable, scalable, export ready, and then also using a thing. So if I was going to start another business at this point, if it wasn't in tires, I would focus on something that had a similarity. So medical waste, plastic waste, for example, pyrolyzing that would be something I'd look at. I would maybe also look at, clothing waste. This whole fast fashion thing. There's tons and tons of horrible polyester stroke cotton blends that you could do something with. Electronic waste, just focusing only on electronic waste, but the whole model would be the same, just focusing on something along those lines. Okay. So thanks, guys.
Thank you, Wanda. As you can tell, Wanda's very passionate about this space. I think, nobody goes to university for 11 years and just to learn one simple business. Well, simple as we see it, but clearly there's all of those pitfalls. So next on our agenda, we're going to have a question and answer session. But due to time, I think, anybody who has a question, can raise, and then we can have just a sort of 10-minute discussion, and the relevant individuals from Invequity side or Wanda can then just answer your questions. Do we have any questions? Oh, okay. Jeff.
I don't know if I'm a panelist or asking questions. Wanda, just of interest, can you just talk to the room around the potential targeted capital raise you have for phase 2? When Invequity came on board, on behalf of our clients, our investment was 30 million rand, and we valued the business at around 150 million rand. So I'm just trying to give the scale. So perhaps you can talk about your process and thoughts around your round 2 capital raise.
So on the round 2, the one thing that we've been waiting for to demonstrate clearly are those 2 sides of the business that I was talking about. And one is getting some of the mining contracts. So we've got about 4 mines. And I don't know if any of you have worked with mines or anything like that. The time that they take for a contract to get inked or for something to move has been school fees of its own. So one of the things I really wanted to wait on, we've been doing large-scale tires, but sometimes for free, just to show people we can, and a lot of times from the Waste Bureau. So I wanted to make sure that we can prove to investors that, hey, we are taking tires from the mines very easily. We're processing them for a really nice fee. It ticks that whole box off because it shows the thing. And that should be by now in Jan. And then the other side is to now start showing, because we've already been creating tires with some of our clients with the carbon that we've made, the carbon black, but those are forklift tires. And some of the clients have been taking it even as a powder form, but in smaller amounts relatively. So what we wanted to do is start showing, hey, now that we're pelletizing, look at the amount of product that we're selling and the uptick in the revenue side. Because at that point, it's all Lego, right? And we can just start saying, okay, great. Given all of these and the mines that are now coming on stream, we do need a much larger site. And we'll be putting one as well in the mining areas. So phase 2 is basically in the country. Will be Katu, a large-scale site in close to where we are, where all 3 of the businesses will be, because now all of the energy that we'd need would come from the reclaim side of the business, as I told you, where we're storing the gas. So there'd be much greater efficiency all around. And then we'd probably have another resize arm in the Limpopo area. Phase 3 would be, okay, can we move to Botswana, for example, or something along those lines. So in that sense, depending on how much debt we're raising, how much equity it's going to be, or some of the grant funding that we can get, we're probably looking at about 350, 400 million rand.
Cool, thank you.
Thanks. Any other questions? But I'll take a question online. I think we did cover it. They actually asked, who do they get in touch with for the Connect to Grow? You can get in touch with Janet, which is just JANET @invequity.co.za, or you can send an email to info, and it will be directed to Janet. Another online question. I think this is to Jeff. What are your valuation approaches?
I think I touched on it earlier on. Yeah, net asset value, discounted cash flows, multiples on earnings, or whatever's appropriate for the business at that point in time. Yeah.
Okay, and that's for both the investments we're making and the clients we're onboarding.
Yeah, so we actually we get involved in two levels. The one is the valuations for obviously our investment companies, our portfolio companies, and then for those of our clients that are coming on for the BE ownership solution, obviously there's a valuation of the trade co, the businesses that are looking to get the black ownership. And those can be done typically by a third-party expert valuation or auditor. We can also perform that service, but normally that's a sort of, again, a common sense approach.
Okay, thanks. I think those were the online questions, and we have reached the end of our program. Okay.
So I think it's important to note in relation to the valuation of the trade co's. We have situations in which perhaps there's some level of urgency around implementing a solution, and where the process of doing a deep dive independent valuation, the timelines don't allow for it. So what will typically happen there, we'll assist the client in call it a back of the matchbox, multiples driven type of valuation, and then the client would have a 12 to 18 month window to go and then bid down an independent valuation that then applies as the base value. Because as some of you may be aware in the structure, that's quite important in order to then track where that value growth